first. So let's see. What do we have? Why don't we get some charting out of the way first? But we'll cover some charting first and see what's what with the markets. We can cover some of your guys' tickers. If you've got any good research that you've been looking into recently that's been piquing your interest, and you want me to have a look at it, feel free to throw it out there. So, as you might have noticed, my charts are an absolute mess right now between all of the indicators that I have on here. I definitely now identify as an indicator. I'm not sure if I can say this word on YouTube. We'll say gigolo. I'm an indicator gigolo now, because all I do is just put more and more information, dirty up my charts ever further. But one of the things that I was watching was the overall market, and I'm shocked at how accurate these patterns were for the harmonic patterns for the S&P. So it called this top perfectly. We started looking at these harmonic patterns 2 weeks ago, and this one showed up right here as soon as we had this wicking candle that tapped on the 200 period moving average. This is the daily, and it showed an anti-butterfly pattern. That's just this one right here. So the entry point right here on this candle probably wouldn't have been able to get in until after the print had completed. So best entry would have been on the next 2 days, and then you would have taken a short position. Having taken that short position, you could have had take profit here at the bottom of the head where the shoulder started to form, or you could have held through it and made, what was this? It's like a 6% profit off of this candle right here. 5.35. So still really good. And that would just be with flat, with a straight short position in stock. I ended up with puts, puts and calls on levered inverse ETFs like SPXU. Could have also played the SQs as well. Like all these inverse ETFs, they did so well this week. So the next big burning question is, where's it going to go to next? So the first thing that I'm expecting the SPY to do is tomorrow we're going to absolutely hit this 50 period moving average right here. I expect a little bit of consolidation, but I still expect we are going to break through and make it to this target zone. Somewhere between, I was estimating that we might undercut 3,900 on the S&P, so that would bring SPY down to about 390. And if we did undercut it and manage to break through, then we could see a low down here in the second target. But I'm kind of expecting a slight undercut and then a bounce and some consolidation here before the market starts dragging itself down again. We'll see what tomorrow looks like early in the morning. But I have a feeling that the first move in the morning is going to be an immediate bid up, and then followed by like a big deep breath before the market falls over the cliff. The market is kind of like, well, Jerome Powell achieved his mission. We'll say that. The Jackson Hole Conference went even better than I had expected. As far as like, well, I say better than I expected, but I mean, Jerome Powell achieved his goal of manipulating the market down better than I had expected. He pulled no punches, and I know that a lot of people thought that he used really soft language, but what he did this time, which was very different, was he emulated the actions of his predecessors of the 3 past federal chairs, between Bernanke, Alan Greenspan, and Paul Volcker, who he mentioned 3 times by name, and he expressed a interest and desire to emulate his actions, and making the decision to be tough now before Volcker style interest rate hikes to 20% would be necessary. It was pointed out to me, however, that we wouldn't even be able to come close to Volcker's response because of the debt crisis that we have. And I don't want to take credit for this information because I didn't find this on my own. I actually have not been looking as closely at the global debt situation or the U.S. debt situation. There's a guy by the name of Brian Kim who runs a YouTube channel called Clear Value Tax, and he actually he put all the figures together. The guy's very, very smart. Tracks politics and macroeconomics very well. He does have a good beat on the market as far as like the macros go. So he's definitely not like not a day trader or anything like that. He just looks at what the Fed's doing, what politics are shaping up like, what new policies are going to be for finance, for financial policy and government legislation. And just based on those alone, he's been very accurate about the overall direction of the market. And one of the things that he called out was how extreme the U.S. debt is, to the point where if we rose interest rates up to 8%, then it would basically exhaust 50% of our national budget just to service the debt, not to pay it down, just to service it. We're talking minimum payments. So if the federal effective funds rate rose to 8%, we would basically not be able to function as a country. It would cut our budget in half. And that's the kind of situation that we're in. And now we're only at 2.5%, and we're not even close to being able to pull down inflation. We're not even coming close to keeping up with it. So the situation that we have now is that unless Jerome Powell is able to get the federal funds rate up to, I'm going to estimate 4%. If he doesn't get it up to 4% by the end of the year, and it's at 2.5 now, then he will never be able to pay down inflation. He will not be able to crush inflation fast enough for it to not remain sticky in the economy. And either situation is absolutely terrible. Like, it's all bad. But in the former situation where Chair Powell is able to reach that 4% figure, he's going to have to do it before spring of 2023. If he's smart, he'll bring it up as fast as possible and get it up to 4% by the end of this year. And also start throwing off MBS from the balance sheet. But in either case, I'm speculating that the market is going to be heading down, going in through the end of September. And honestly, I am pricing in the possibility, but not treating it as a certainty. It's just a possibility that we might get one last rally before just a straight cliff fall right down to our pre-pandemic highs at around 300 and around $340 on the SPY, or 36 or 3,400 on SPX. Those are the kind of figures that I'm looking at. My big short is Apple. I'm anticipating that Apple is probably going to find some support at least down near its. Well, let me pull up I need my candles and I need my daily. All right. So Jax, as you heard in my video from yesterday, Jerome Powell sent a rocket up our Jackson hole across the entire market, but I still think that there's some more pain coming for us in the future. So I'm tracking very closely the moving averages for all of our big plays. Let me go ahead and pull up this one in particular. Let's see, I was looking at, was it EMA or SMA? Okay, it's SMA. All right, so my anticipation for Apple is that it's likely going to drop to about 60, so it doesn't have much farther to go before it finds some support here at the 200 moving average. This is going to be a area that's going to be, it's going to hesitate here. It'll probably still break through though, and I'm anticipating downside into December, um, but I don't see a scenario where the 50 moving average crosses. So that's my forecast for Apple because I want to get this one out of the way since it was my big short here. So my projection is for us to gap down and move alongside with the 200 moving average, maybe even move a little bit up and then find some support going forward before we come back down late into September, as per seasonality dictates. Apple's probably going to be the one that's hardest to pull down in the market, but once it falls, that's when pain comes for the rest of us. And my main reason for that is just simply that Apple has historically held up the best, but it has been the weatherstone that predicts the collapse. So once we see Apple going into free fall below 150, that's pretty much the marker for capitulation that I'm anticipating for the broader market. Tesla is bull flagging like a mother, and I'm actually really surprised to see that it held up as well as it did. But I am anticipating downside going into next week. It finally broke down and closed into this wick area here after the split. So tomorrow is going to dictate the direction for Tesla for the rest of the month. And I'm thinking Tesla goes down. Tesla is my big play for a new short. I'm guessing that there will be a little bit of chop here around the 50 and the 100 period moving average before we get a breakdown, and then Tesla continues to fall into mid late September. The next week we'll probably see some pain for Tesla holders. I could see it getting down as low as this price level at around 245 to 250 at the lowest point. And then downside further beyond that is going to probably wait until the end of the month. We'll see how fast it goes though, because sell-offs like this they can hit pretty quickly. Sell-offs tend to be more extreme than the sell-offs in these big blue chip stocks tend to be more extreme than their bid ups because it takes time to push things up. I am drawing a big megaphone on Tesla to mark out where I feel like the lowest point could end up being. After the earnings is where I suspect we will start to really see the big hurt on Tesla, but it's going to depend on how the market prices it in. The market may anticipate bad earnings for Tesla because their last earnings should have been bad, but they weren't. Now we know that their Q3 earnings will be. So it's kind of a certainty that Tesla is going to report a big loss in Q3 because of the loss of their China factory and the rapid increase of cost for gas that I suspect will be coming soon, and the increase of prices for semiconductors. Oil is going to dictate a lot of the momentum for the next week. So I'm treating this one as a good inflation hedge. If you have access to the commodity markets, I think that once oil cracks through the 200 period moving average here, that's going to be your buy signal for a big surge in oil prices. Very similar to the move that we had here in early on in the year from January through May. I am going to estimate this megaphone to complete going till possibly until maybe 150, $160, but I'm going to be conservative and say that 120 is my price target for oil to reach, and that's where I'm going to be looking for either a double top or a sign of strength and a breakout to continue. So first big target is going to be 120, the 120 area. What else did we have? Dollar Tree surprised with a big sell off after its earnings. So this one kind of shocked me. But we've had big gap downs and gap ups in Dollar Tree. So short term, Dollar Tree might recover. because I mean it is a defensive, with it being a down discount store, and we're heading into a hyperinflationary environment. So I'm not sure why this one is selling off so quickly. Dollar General is doing the same thing, and it's kind of bizarre. Um, but I'm going to watch this one closely. Ollie is still a. I'm still bullish on Ollie, but I do know that it's going to have to find some support somewhere. The $58, $59 level looks the most likely for a bounce. So if you're looking for a defensive sector stock, I like Ollie to buy at 59. That's where I'm looking at that. Energy sector overall, if you're not able to buy into oil, I'm playing this. I'm playing this bull pennant on XLE, where we've had a small breakout here, and I'm looking for continuation to break out above this $85 level. If we can get this breakout here, if this does not end up being the top, and we see a nice bounce here tomorrow and next week, then I think that XLE could hit 100, $100, or maybe even 112. So this is a nice sector to play. That's a good inflation hedge. XLE took the least losses at Jackson Hole. All the sectors were down, but XLE took the least hit. So this is the one that I think that is going to be the big runner as far as the sector indices go. Oh, the VIX is going monstrously high. I don't know if the VIX is going to retrace next week. I think that honestly the market's going to sell off. So if you don't have an entry into VIX, it's probably too late. But I do anticipate VIX hitting 35 at some point in the future. The dollar has been continuously strong as well, which is creating a lot of pressure on the market. It's hurting the market pretty badly. We had a big bull flag, a big bullish pennant, as a matter of fact. This looks more like a hockey stick than anything, but we broke out above this flag, and it's been consolidating at this level. So I think that the dollar is probably going to be heading towards 112, 114 at some point in the next month or two. I watched the junk bonds, the HYG junk bonds. This has been consistently a good lead indicator of what the market's going to do. If the junk bonds are selling off, then expect the market to start to go down with it. And it just broke its 50-day moving average to the downside. So if it starts trading below this average, then expect a lot of selling in the bonds market. This is what I'll be looking for to lead the SPY further down. The short-term bonds also are getting pretty wacky. This has also been a very good indicator also, just because the bond market traders tend to be pretty good on their bets. When the bonds start going down, or when the bond yields go up, I should say, prices of bonds going down, then that means that the market sell-off is coming. So they're going to start looking for higher yield bonds as a hedge against the market, and we'll see some serious selling pressure. Futures on the market are also going down hard, and they're trading below their 100 moving average now. So if the futures market doesn't reclaim support here, it's not coming back anytime soon. And I think we see 3,900 in the SPY and the ES1 futures for the S&P within the next 2 weeks. Let's see, what else do we have here? Valid inverse bet for that is SPXU or SPXS. You can go long on these two if you want to trade SPY to the downside, or you can short UPRO. It's the same bet, basically. They're both levered. Just be careful. Housing and real estate, I'm expecting to perform terribly for the rest of the year. September numbers are going to be September numbers are going to make a huge difference in the mood and the projections for the housing market. So I'm watching median sales price, median inventory, average listing price, and supply of homes on a monthly basis for XLRE. I'm expecting supply to skyrocket, and I'm expecting the price of this to head straight to the floor. and it's probably going to take until November, December when the housing season calms down for the prices to start really coming down. But spring, if there's no recovery in spring, then I think the housing market will be crashing. That's kind of my
It will crash.
loose
Yeah,
timeline.
it will crash. That'll be your answer, right? If there's no demand, it'll have crashed.
Yeah, that's kind of my like loose projection is this little area right here, January to March. This is where the listings start to get pretty crazy, ramping up for the spring housing sale
Yeah.
season. This is where we start to see the real pain in the market hit. I'm anticipating I'm anticipating a lot of hurt for the real estate sector. So XLRE might sell off and break through this megaphone by that time. It's already moving in the right direction. Finance sector, I'm bearish on overall. So anything that's related to mortgage lending, so like LC or Lending Tree, the Lending Club or Lending Tree, I'm bearish on. I'm very bearish on Bank of America, Morgan Stanley, and JP Morgan Chase, as well as PNC. JP Morgan isn't here just because it's in my top 10 SPY list. BBIG, I'm bullish on for next year. I'm going to be conservative with BBIG, and if I'm going to take any new
Just
positions
waiting for
at
the
all,
merger.
yeah, I want to give a lot of time for the merger. So any position that I take, any position, if any at all, that I would add to my BBIG position would be for January of next year or summer of next year. That's how much time I want to give the company to bring things together. And I will be buying, if I buy anything at all, in the money call contracts on this, because this is one that I would want to own in the future. BBIG stopped being a squeeze play for me the other day when I talked to Eric. It's now a long term value play investment. That kid's smart. That kid's smart.
Yeah.
He does know what he's doing. I feel really confident that he is the right guy for the job. He's young, but man, he's got the right attitude. I really
He
like him.
sold and he bought and sold a number of companies. He started and sold another
Yep.
companies. He invested, right? He invested in how these.
Bojangle was the big one. Oh, I just saw this for the first time. Curve is doing a bull pennant, a very large one. This is a very large bull pennant. The the flag kind of
Yeah,
went on
for
for a long way, but now I'm looking at Curve holding up support at its 200 moving average on the 10-minute. I'm thinking that Curve is about ready to start ripping next week. Earnings might be good. Earnings might be good. I really like this. I really like this pennant. It's very good. All right.
All right,
Thanks,
thanks,
guys,
guy.
so much
Sorry
for
for that.
hanging out and being a part of the conversation. We'll look forward to doing this next week, and I will see you tomorrow at the Bell, where we will have a hell of a time in the markets.